Good evening, everyone. Today, Graph presents you one of a very interesting webinar, something more from a lens of developers' point of view, that how would the on ground, or let's say the financial mechanics of a real estate investing would work. So we have with us Mr. Ramakrishna Dutt, who is the managing director, a leader and an entrepreneur in himself from Earthen Hues. Uh, so I would request you if you can give you just a brief introduction.
Thanks for wonderful introduction, Kaivalya. And hello all. It's been a wonderful day here in Bangalore. It's been an exciting journey. By the way, I'm Ramakrishna Dutt. I hail from Bangalore. I'm basically a serial entrepreneur. Started my career in manufacturing, then ventured into IT and IT-enabled services, then got into telecom, where we designed mobile phones. Pretty much we were the first in India to design a mobile phone. And a couple of selling of the companies and all that stuff. And we're still in IT and telecom. About 10 years ago, we diversified into real estate. It was more of a calling for me personally. So it's been an exciting journey. Looking forward to more growth and more achievements.
Oh, that's great. That's great to hear, sir. I think we would be more than interested to hear from you more about your journey, and I think it seems to be an inspiring one. But just for a brief moment, I think we'll just go ahead with a brief introduction of Graph also, and a brief introduction about myself, and then we can continue from there onwards. So as we know, I think majority of our investors would have already known, but just to again specifically understand, we are Graph. We are in the field of democratizing fixed income investments. We try to cater to the needs of investors, retail investors, by bringing real estate or other alternative investment opportunities. And we are led by an exceptionally well-seasoned team, someone with more than 100 years of total experience in the banking and financial space industry as well. We are headed by the founders, Vineet and Saurabh. Thereafter, our teams, these are the leaders, basically Jay Prakash, Ankit Bhartiya, Apurva, Vikas, Pratik, and Vasu. All of this together basically manage the end-to-end functions of whatever you see on the Graph. And these are the key people who are crucial towards the successful journey of Graph. We are backed by one of the best equity investors we could have on our side. The key investors would be Excel and Harmony Partners. Thereafter, we are backed by individuals, very influential individuals such as Siddharth Shah, Dharmil Seth, Ramakant Sharma, and from Mankekar Family Office and Capital A. So as I said, we are one of the horizontal distribution platform. We bring opportunity, PTC transaction, or something like corporate debt. Again, that would be across different spaces. It would be across different segments. And this will be more of something which will increase the returns of your portfolio and try to reduce the volatility as try to minimize the volatility as can be done. So as I said, this would be just a brief overview of the products which we have. The key important aspects is we are providing investment opportunities anywhere from 3 months range to 36 months. This basically gives a more stability to your portfolio. It provides a diversification benefit, and it provides a high return. Depending upon the risk appetite, an investor can participate either in an unlisted corporate debt, an invoice discounting, a leasing facility, or a venture debt facility. And our journey till date has been one of its own kind. One of the very very few in this space which have been able to achieve such a tremendous growth. Where, as we can see that in September 21, when we started our journey, since then in April 24, we have a registered users of more than 1,70,000. We have been able to source and distribute in investments which have been in range of 3,000 crores plus, and have been able to do it at a minimal volatility or minimal risk for our investors. coming to the core of the topic, I think today we are going to discuss or deep dive into the real estate space itself, and again, what real estate investments per se come along with Altgraph. So over here, it would be first of all, these are structured into fixed income securities, which are primarily by the way of NCDs, debentures. So this provides a fixed income source in terms of the interest payments that would be either in interest in a monthly or a quarterly basis. Again, this comes with a capital appreciation and a downside protection. Lots of security and safeguards are built in so that our capital is safe and sound, and it provides high returns, yields in range of 13 plus IRR. Again, real estate as an industry is classified as an inflation hedge. So while this provides one of the key factors, portfolio diversification and inflation hedge. Basically, let's say when the majority of the economy is down, at that point also, this investments effectively are providing fixed source of return in terms of interest payments, and this is where it acts as a inflation hedge, whether the returns are let's say, in a much more haywire manner across the industries. And depending upon the type of the investments which you do, whether be it direct buying or through other sources, real estate also acts as a source of tax benefits, basically under ATC, and again, claim of loss on housing property. These are one of the safeguards which provides tax benefits to the investors. So if we try to classify real estate investments, how would the key classification look upon? It would be, I think, anyone would generally know that you can directly purchase a land or buy a residential apartment or a house. Second way to do is that you can directly invest into the real estate companies which are listed on the stock exchanges. Third would be you can participate through the way of REITs, which provides much more diversified exposure and much more experienced management, which will be managing those. Or you can also participate in the infrastructure bonds. And the third way would be participation by the way of AIFs. So all of this particular investment classification or asset classes brings along with them different set of changes. Let's say when you purchase a land or a property, then it will be a very high concentrated risk. Depending upon the macro environment or depending upon the micro market as well. This may depend. This will be kind of illiquid in nature and kind of be a long-term horizon view, which may come into the picture. In public markets, this would be more driven on the economy of the country in which we are investing, and this would be subject to regular market volatility. Let's say if the economy itself is running into the volatile environment, or let's say economy is going into the recession, then in general, all the public markets, be it any equity listed shares, they are subject to downside. In while participation in REITs and infrastructure bonds, these are subject to very low returns and are generally of very high tenor. Uh, One cannot basically deny that this provide a source of diversification, but this is one of an investment which is effectively for someone who has a low risk appetite. And participation in AIFs is again bringing an own set of challenges that they require a higher ticket size. These are generally for ultra HNIs who have a minimum investment portfolio, or let's say a minimum ticket size of 1 CR plus, who want to invest and take this sort of opportunities. I believe we have already discussed this in detail, but again, when we go into different asset categories itself or classifications itself, in residential, one can take a house or a building. In non-residential, there are again a segregation in two types. You can either take a retail asset or a commercial asset. Retail would be something like shopping center, office, or a hotel, while commercials would be somewhere data centers, warehouses, which is one of an upcoming segments. While not directly related to us, but this is one of also investment avenues that is open in the space of real estate. And I think all of this particular assets, or you can term it as project finance kind of investment opportunities, these are subject to different types of risk. And the key risk would be approval risk, a construction risk, and a sales risk. So this would be related to the entire project life cycle or the asset life cycle. I think This is where us as an Altgraph come into a picture and try to bridge the gap between investors' requirement and provide them with well curated and underwritten by a team of experts, some sort of investment opportunities which will cater to different sort of needs of the investors and can effectively provide them the return which is comparable to the market returns. And this generally comes at the back of uh, several factors, or you can say several expertise that is developed through the leaders which take a call at the investment committee here at Altgraph, as well as probing on the experience of several due diligence agencies, which effectively help us to curate these investments and effectively structure them and bring the final product to our investors. So the key challenges, I think, which one generally faces in terms of real estate would be we do not have a sufficient information, or generally we do not have the capability or the potential to put a very big investment in a single shot, or we do not have the capabilities to bring due diligence, or we may not be able to curate the opportunities which may be able to provide us the high yield. This is all catered to, and this is all taken into consideration when we at Allcraft basically structure any such opportunity. Uh, I think uh, this has been reiterated several times, but again, just briefly capturing how do we do it? We do it on several parameters. We evaluate the developer, we evaluate the project, we take a credit assessment of the entire project, and we then highlight what would be the key risk and try to mitigate it in the best possible manner. I think this is kind of a very cumbersome, but I think this is where Mr. RK would be able to help us better, and we would be able to understand what would be the key psychology that how a developer and a lender thinks on these lines, and effectively try to structure an investment which is suitable for all the investors we at Altcraft have. I think if uh, we are able to answer your questions in a very satisfactory manner, I think you should be able to visit our platform and see more and more of the real estate deals, and would effectively encourage you to go across these opportunities. With this, I think we'll again want Mr. RK to come in and help us bit to understand on how we would go across with the real estate as an investment opportunity for most of our investors at Altgraph. So, I think we can basically we have some sort of questions. How would structure it is basically we would want you to give an overview on different set of investment parameters that would come across when
Okay.
evaluating an opportunity, and thereafter we would open the floor for our investors to ask some sort of questions, any basically whatever they feel is that this is a key point which they want to understand. I think nobody would be a better judge or a better expert than you to help them bring in the confidence and bring in the basically bring in the confidence to invest. Okay. So with that, sir, I would just request you on a couple of points. As you said earlier, what brought you effectively to the field of real estate? You said it was a calling. So why this particular field? Basically, people are very scared when it comes to this. So what sort of calling or what sort of expertise we would have, or do you think that this would be something you wanted to do since the beginning?
Uh, kind of. As I said, I was all through my career of about 32 years. I've been largely into IT technology, and I love innovating and getting into the new stuff. So all along, I was totally involved into technology. Uh, and about 10 years ago, I thought it's too much of tech. We want to try something new. Uh, and all along my career, I've been known as somebody who tries something new. That's the way I work. So uh, when we wanted to do something different, we thought through a lot the psyche of my own psyche in particular, and the management psyche. What works good for me, and what are the important factors that we should hit, as we say, the bullseye. And that's how I ended up picking up real estate as a major diversification. And also the calling, because there was some amount of legacy in terms of my parents being in that. And my wife also comes in with a good amount of rich experience in real estate on a multinational level. So all these factors prompted us to get in. And also we wanted to bring in whatever process learnings that we had and professionalism that we learned in our IT space, trying to implement that as much possible in this segment. And overall, if I look back over the 9 years period I've spent in the industry, it's been exciting. In fact, before coming, a lot of people would, raise their eyebrows when I said from IT I was venturing into, real estate, because these are two opposite segments. And I think the apprehension should not be there, and I'm really happy for trying this out. And it's not as cumbersome as what it is made out otherwise.
No, no, definitely, sir. Understood. I think that's a very important point that to bring the professionalism which is required in IT and the telecom industry into the real estate space, and that is one factor which I think sets apart most of the real estate firms which are very successful in the country. So I think well, on these lines, I wish that Earthen News definitely follows that trajectory. But just coming to Earthen News, I wanted to understand what sort of journey does Earthen News take, or a picture over this 10 years, and how would you see that the upcoming 10 years would be? So, we have done a couple of transactions with Earthen News. So, how has this transactions been? I wanted to understand how is Earthen News performing in general?
Going back my early days, we started small, try to understand how the dynamics of the industry works and how we fit into the industry. It was a lot of learning. I'm a person who doesn't go into the standard solutions that people come up with. So I had to do my own trials, learnings, and every project we learn. Even now, there are a lot of learnings at every level. But it has been really exciting, a lot of new learnings. What largely, I think, what not to do kinds. And started small, and then we started focusing on the major growth areas. What could be the actual growth engine in a given micro market? What could be understanding the customer psychology is very important. And I think when it comes to real estate, it is a proper mix of everything that has to go into the bucket together. And only that works well. So over a period of time, your maturity and understanding different aspects that is required will take you faster and uh, more efficient way of delivering projects.
No, no, understood. So in terms of numbers, if you can just quickly glance upon that, what would be the total number of projects which we have completed till date, and what would be the approximate volume that would have catered through?
Over a period of last, as I said, 8 to 9 years, we've executed about 6 to 7 projects. We've crossed about 1 million square feet we've already delivered. And initially, we used to take more time, turnaround time, starting the project, ending the project. And unfortunately, we got COVID in between. But now I think we've got these things ironed out. We have kind of an efficiency to roll out a project roughly around 12 to 15 months.
Great, great. So wanted to understand one more aspect from you that uh, generally when we classify Bangalore market itself, so what sort of real estate investment opportunities come across in Bangalore market? Basically, what would be the key classifications of these assets?
Largely, there are two varieties for the beginners, residential and commercial. And in residential, Bangalore has a traditional outlook where you have a standalone house. Typically, an old Bangalorean would love to have an independent house. Again, it depends on what is the mentality of the individual. But these are the two key segments. You have communities, you have standalone units. And when it comes to commercial, again, there are two parts. One is the office spaces, which also categorizes as commercial. Then you have retail. Then you have the industrial segment, which would be warehouses, industries, and infrastructure, that kind of related. So this is the segmentation. And when it comes to Bangalore, there are different zones, and each zone has its own growth markets and you know trends. And like for example, East Bangalore largely is powered by IT, and you have North Bangalore, which is coming up with a huge amount of IT investment and infrastructure being built. Then you have South and West Bangalore, which is predominantly residential. So depending upon the kind of mix, you can come up with residential push, IT push, industrial push. Based on that, different projects come up.
And so when we speak about Earthen Hues and the projects which have already been completed, where would this particular segment fall under? Basically, what sort of projects does Earthen Hues take? Do we specialize in something, or are we present across the spectrum?
We have predominantly, on a very planned way, we've focused on plotted development. What we do in plotted development is again focusing on premium gated communities, and there has been a uh, customer expectation which has changed over a period of time. Now, customer wants all the elements to be taken care. They don't want just a bare bone plot to be given. So people want a community, a gated community, facilities to be in place, a clubhouse in place, because they want an experience. They don't want to lose out anything. Quality is something which I have seen a Bangalore customer appreciates and wants or looks for. That is the trend which is strengthened over last couple of years. And we are again focusing in North Bangalore for various reasons because of the planning that has gone through over the last 15 years. Amazing real infrastructure, and accessibility is good. And as I said, this is the right time where a lot of IT companies are coming in, moving into North Bangalore. And a lot of government announcements like KDB is coming, and pretty large projects. And private is coming up with a lot of tech parks, and schools have come up very well. Hospitals have come out. Now, as we speak, North Bangalore is coming up with a lot of hospitality and entertainment. So it's all the elements of a complete lifestyle kind of a living is falling in place. So we look forward to a huge growth in the next couple of years. Likewise, there are other areas of Bangalore as well, but these are the elements which you have to look for if you have to plan for which micro market you have to get involved. And that's what pretty much we've done in Earthen Hues. We've been focusing on North Bangalore all along.
No, that's great to hear, sir. So just over here, when we are focusing on plotted developments, so in terms of this particular asset classification, how would be a plotted development differ from a simple residential construction? So I would want you basically, if we can help it understand in, would there be different sort of approvals that would be required? Let's say there would be a whole different set of construction activities that would be go under this. So how a plotted development in generally is different from a residential construction? Does it Are there any other parameters on which this is judged, or do we basically see that this will be an extension, a plotted development will effectively be an extension of a residential?
Yeah, you can say that, but in terms of specifics, the progression of approvals would be you need to have a status of the land to be residential in classification. And if it is not, then you have to get those things done in terms of governmental approvals and all that. And once you have a residential status, uh, we have to get town planning authority of the local area, which has to give the layout plan approval. And once in Bangalore, it's been amazing that to control the quality and the efficiency, and you maintain the norms. All the town planning authorities have a strict norm about how much to develop and what are the parameters of development, quality of development, and they also ensure that you first give the intended plan and get that cleared up and complete the project, complete all the developments, and only then you are allowed to make sales in terms of transferring the end property, end unit to the customer. So in that way, government has come out with a very nice framework which we have to follow. And once the customer buys the plot, registers in their name, they would be transferring the individual khata into their name. And after that, they apply for the unit, that is the building plan approval for the house. And they have to follow the requisite norms and start the construction. This is the life cycle. And the beauty of this is, I come from an old style Bangalore thinking, standalone house. So for the customer perspective, I keep telling this to all my customers that the value proposition in these kind of units, there is a complete lifestyle experience of a community of an apartment complex. You have all those elements built into these projects. So you have a clubhouse, you have a community, you have all facilities taken care and services taken care. You don't have to run around. All you have to do is plan, build, and live. And the density of population comes down in these kind of communities. And in terms of financial, it is always better doing this compared to as against a typical an apartment investment, because land appreciates faster. And even in a current investment level, if you have to consider land and if you have to build a house, always if you look at the whole expenditure, this would definitely make a more attractive investment as against a apartment investment. This is my personal confidence, or I'm extremely kicked about this idea. And that's how the same thing I see in my customers also acknowledging this.
No, definitely, sir. I understand. Purely from a financial perspective, definitely, if someone invests in a residential apartment, definitely building is one of a depreciable asset, while land is always going to appreciate. So the general trend would follow over here also. So I agree with your opinion. Uh, no two thoughts about it. Again, when coming back to a real estate developer, how do they approach a project? Let's say when you see a project opportunity, how would you classify it in different stages? What would be basically the key stages? Let's say approval would be one piece, construction could be other piece. So in general, what would be the psychology that would go behind?
See, typically, whenever we approach a given project that we would want to start or something, couple of things that we look at, the location and accessibility, that plays a very important role. And then in the micro market, what are the developments that's happening? We always look at how fast our customer can build a house. That is the way we look at, because we don't expect somebody to buy a plot and wait for 10 years to move in, or 15 years to move in. So we would always look at a wait time of about 6 months, 1 year, 2 years, depending upon the appetite of the customer. How fast they can build a house and move in. When I say move in, we would have given the community, but whether the micro market is good enough for them to live, move in and live, as in facilities around, whether it is connected well, and support systems and all that stuff. Simple shopping, and if there's any entertainment that they have to look for, schooling and medical support, these kind of things. So this is with respect to the accessibility and the location. And next important thing that we look for is the uh, title and the legality of the property, which is extremely critical, and it has to be the hygiene of which is very important. And after that would be the approvals, necessary approvals. As I said, you should be having a residential property for you to go for. And then you have to go for the necessary approvals. There could be some amount of planning. You should ensure that to ensure there's not much of delay over the project. Don't commit any mistakes, which will take you in circles. So uh, ensure that your compliances and your norms are all maintained properly so that your approval time is minimized as much possible, and have the right construction strategy. Delivery becomes important because that's what is extremely critical for in terms of the financial viability of a project. And next important and most I would say rather most important piece is the sales, because after investing and putting all your sweat into the project, you have to sell quickly because these are all extremely capital intensive investments. That being the case, you should have a proper robust sales, uh, mainly target, profile your customer, profile your micro market properly, do the right pricing, and then you have to reach to your customer. That's the key, and that's the $1 million question. Um, so you should mitigate that risk either by way of having your own teams, and you could also develop your networks. You should have CP networks. There are different platforms that you can get into, market spaces. Uh, Whatever said and done, end of the day, proof of the pudding is put all these elements in the right spaces, right proportions. Only then you can complete the project in time in every way, the way you wanted and intended to be.
No, no, well said, sir. Uh, so coming to one of the crucial pieces which you have slightly touched upon, uh, whenever any real estate project is, let's say, discussed about, one of the key aspect which generally comes to most of the people's mind is there are lots of approvals. These approvals are to be obtained from government bodies, local bodies, or central bodies, and this generally are factors which are external, which are not, which can be controlled in a very limited manner. But however, if gone haywire, the investor or the plot buyer effectively is put at risk. So, how does a developer approach this, and what sort of strategies does one basically employ to mitigate this sort of risk?
See, there are two aspects to this I would like to draw your attention to. One is
Hmm.
as a developer, and another is as an investor. These are two different perspectives. As a developer, a developer comes into play from the beginning. You have to look at what is the status of the land, and what are the contingencies, and then if this land is not a residential land, then can you take some approvals and make it residential, and how much of time it takes, and how many steps are there? There are different steps for different situations, right? How many steps and how long does it take? That is the uh, biggest question that you have to address before getting into a project as a developer, because that sometimes could really take long period, and you could also have some deviations which you can't address, things like that. Then you have, once it becomes a residentially converted property or residential status, then all you have to do is get the plan approval done. I'm purely talking with the perspective of a plotter development. Then you are good to go. Um, but with respect to the investor comes in after all these things are in place. So the risk element or the perspective that they look at is different and should be different, because for them, all this difficult part would be over, and largely they would come in possibly at the level of approval stage or execution stage, which is largely in place because all you have to do is execute a plan in place, and as long as uh, the developer is fairly disciplined, I think it sails through and completes the project in time. As I always keep telling, timelines are always important for real estate developers. You have to be disciplined, because if you get too excited and lose track and lose focus, then it can be really messy because, as you know, it's deep capital involved, and the cost of the mistake would be very high.
No, no, definitely, sir. Just to summarize it, if my understanding has been correct, first, the key approval would be conversion of this particular any piece of land, if it is not in residential state, would be into the residential state.
Correct.
Thereafter, effectively, a plan layout approval comes into the picture. Thereafter, basically, let's say a plot buyer or an investor comes into the picture. After which there would be, I think, as I understand, RERA would be one of the key approval that also comes into the picture, and then there would be release or OC. So, how crucial are these other two parameters of approval? Basically, RERA and the OC. Uh, do they also are something which are uncontrollable, or this is something once the project kicks off, once the plan approval is in place, this will sail through?
Yeah, there are two things. One is, as you said, the plan approval, preliminary plan approval, and then the release. We typically the occupancy certificate in building plans, and in these kind of projects, we call it as release. These are equivalents. So to that extent, you have to follow. And what I have seen is, as long as you don't commit mistakes, things go through. Uh, then RERA is more a monitoring authority. It's more than a compliance authority, more than an approval authority. So RERA has a very strict norm in terms of adhering to your timelines, your commitments, and also your financial discipline. So what RERA monitors is, it needs your project to have an escrow. All your collections get through the escrow, and usually if somebody is going into a debt or NCD process, then there's a trustee that monitors all these processes, and that is the good part as well. A real estate developer is forced to go through all these processes, which is quite transparent. And as you are also executing in RERA, you'll have to ensure that you follow in terms of your professionals give all the certifications that you are, that is on a quarterly level. If you're following it up, or if you're, they give what is the, they certify the level of development, and CA has to certify your financials, and architect has to certify, and an engineer has to certify, and all these things are monitored. So if you are disciplined in following these steps and processes, automatically you go through. If there is any gaps there, or if there are deviations there, then everything falls apart or things get delayed.
Understood. Understood. No, I think that brings a very important perspective into the picture that uh, debt financing generally comes with its own set of caveats, but debt financing generally makes the project monitoring and the project progress in a much more sophisticated manner, or a much more well-structured manner. So basically, effective monitoring ensures the safety for both the for all the stakeholders basically involved, be it a developer, be it the plot buyers, and be it the debt investors themselves. And I think RERA basically has created the ecosystem through which all of this has been possible. That's a very important point, and I think most of investors basically would draw big comfort from this particular aspect. So yes, just a couple of last two questions wanted to understand. Earthen Hues, generally when it undertakes a project, what is the sales strategy you would adopt? Because, okay, while everything else is in place, the escrow mechanisms are in place, there is an NOC structure which is in place, but effectively, if the sales happen, then only the collections would come in or the cash flows would come in. So, generally, a real estate developer or a plotted developer, how do they ensure sales?
The first thing which I always address is, in fact, I asked this customer this question to my team. Look, if you have your hard-earned money, would you put in your money into my product? If
Okay.
I'm confident, everything else is taken care. If our employee who's part of the system, if he invests and puts his hard-earned money, I think that's the proof of the pudding, because I have a direct answer. So that is the first question we ask ourselves. I ask myself. And second thing that we look at is, once we profile the customer and we address or try to locate the customer, we try to have different campaigns. We have corporate campaigns. We have advertisement campaigns that we do. Lead generation becomes important. The story of the game is reach the numbers. And once you have leads, all other things start getting in place. And you also have to address this ecosystem through channel partners, broker networks, and lot many times nowadays you have this market spaces and platforms which has a multiple reach. Um, in sales, you can't be sure of this is the only way you come across, right? You keep trying and keep on trying. That's about it. You will get your answer. So that's what we've done. That's the brute force.
No, definitely, sir. I think that's a true part that bringing the leads, that is the first step. After that, effectively, if the product is good, definitely the leads will automatically be converted. So I can understand. On the other side of the table, we also basically try to bring as curated products and as security, basically well-structured products for our investors, and that is the key to the success. Just one last question on this. Let's say if an investor has two sort of condos, one who has somewhat 50 lakhs and one who has 1 crore. What would be the recommended diversification strategy across the real estate space itself? How would you advise someone who has, let's say, just two different sort of condos?
First and foremost is I am a person who's fully convinced about real estate investment. Me as a person, I've fully got invested personally into real estate. This is something which I'm personally convinced about. So if you have a crore, for example, I would say there are two ways of looking at it. One is you can apportion, based on your appetite, invest in your own direct and purchase. Also ensure that you located the right location. When I say right location, as I said earlier, which are the growth areas, and again, segmentation becomes important. If you are in a CBD, which is already plateaued, your appreciation levels are different. If it is a growing area, then your appreciations are different. Always across, I think in the entire country, I've seen this trend. The newer areas give you more appreciation because the value proposition is increasing faster. In areas where it's already done, in CBDs and all that, because growth is already done. So it takes your annual IRR will be much more challenged compared to newer areas. So one is put your portion of your investment in direct holding. Usually in direct holding, if you buy a piece of land or a piece of property, whatever, you should look at a bit longer period. Don't look at a 1 year, 2 year return. If you have to exit, you look at a horizon of 6 to 10 years, depending upon the location, how it has grown over that period and all that stuff. Quicker way would be investing into platforms like yours. And I'm talking about in general as an industry. get into debt instruments. Nowadays, you have a lot of options. There are NCDs, and good part is nowadays a lot of monitoring is there. So it is built in. It's not like 10 years ago, 15 years ago, how the system used to be. Nowadays, monitoring is very good because one is at the financial institution level. Second is, as I said, RERA and all those agencies coming in. A lot of transparency and authority has come in for this monitoring. And third piece, which becomes important to ensure that the investors' money is safe, is for a real estate developer, every unit that is sold is against the NOCs given by the institutions. So that money is controlled and managed at every unit level. So that being the case, then you have RERA, which monitors the escrow. So money doesn't go around. So it stays in the system, it is monitored, the flow is taken care. So fairly, I would say off late for an investor to put in the hard-earned money into these kind of platforms or debt instruments and NCT instruments is a very attractive investment option from an individual, small time or medium time size kind of an investor is concerned. So based on the risk appetite that you're looking for, you can apportion, it could be 50-50 or 60-40, whatever. That's what I suggest.
No, no, definitely, sir. I think those are fair points. Just to add on to that, definitely, as I said earlier, debt investments also bring into the picture that basically you have a liquidity source which is coming. Basically, with a real estate, as you rightly said, that horizon should be in generally a long-term period. It should not be short-term, 1 or 2 years. This is at the project level that this can work upon, and this is where the debt size investment gives this particular benefit as well as the benefit of diversification. Generally, otherwise, when we see fixed income as opportunities, we see only fixed deposits or let's say treasury bills. This would be the only source of investment avenues which we look. This can definitely, this sort of opportunities in the real estate space definitely can increase our return. So yes, these are also one of the avenues. And as so you said that definitely it should be as per the risk appetite of the customer. It might be 50-50, 60-40, whichever way the customer is comfortable. So very rightly understood. I think it's time to move on to the questions from our investors. I think I'll take one after another. Uh, First is from Mr. Arvind Jain. He is asked that how does a company or a real estate developer deal with recent water crisis in Bangalore? What effect does it basically play in the industry?
A good question and a very relevant question, Arvind. So, uh, what we do is, in terms of water crisis, we try to ensure that we do a lot of eco works, sustainability things. Uh, we always ensure that the entire project that we have, we spread out and ensure that all the water that comes, the rainwater that comes, we try to ensure it's spread across and goes. We don't channel it outside. Only the surplus goes out, and we ensure all that water goes and collects under the crust then and there itself. So all along the drains we have water harvesting. Apart from that, we plant a lot of trees. In a 10-acre project that we have right now, we have a project that's going on called Forest in My Backyard. It is truly a forest in your backyard. Every plot has a small strip of forest that is attached. And in that small space, you will be surprised. We have planted 4,000 trees.
Great.
It's amazing. So I'm of the opinion that you have nature without compromising your comfort. And if we follow at every level, I think that's good enough. So we do a lot of sustainability acts, and that's how we try to keep this going. And maybe because of that, none of our projects have got any water problem. And also, we also ensure that we strictly stick to The norms that the government has followed, especially if there is a nala, don't encourage or mess it up. In fact, we also ensure we put more effort in taking care of the natural flow, and whatever surplus flow that is generated goes into it. So I think it's very important for all of us to ensure that we give back to nature, having taken so much.
Yes, sir, that's very important and good to hear that generally for all the projects which Earthen Hues has delivered, basically we do not see such a crisis arising among them. And see, being living in Bangalore myself, I can relate to that, and that is one of the very key aspects. Basically, when you are searching for a good investment opportunity. Uh, Another question is from Mr. Kiran. He is asking what kind of real estate investment opportunities Altgraph is generally bringing. Are these bonds, fractional ownership, or REITs? So I'll take this up. Mr. Kiran, as of now, Altgraph is bringing generally real estate investment opportunities by the way of bonds, which will be NCTs. These are kind of project finance, and this will be either for the purpose of working capital or for the land type. And this will be generally secured by the way of mortgage of the project land, by additional security if required, cash flows which are directly controlled through escrow, and with undated checks and personal guarantees of the promoters. Uh, I think that answers your question. Uh, Second would be one question is from Mr. Vasan. Generally, when we talk about external involvement, uh, are there any sort of external bodies, let's say some sort of political parties, or let's say external bodies which come into the picture and derail the project, or if generally this is the piece which is not much of a hurdle for most of the developers to cater to. RK sir, if you can help with that, I would be more than grateful.
See, I think there are two aspects again here. Uh, with the from the individual investor that we're looking at, um, there are, if you go on the NCD route, the good part is it's spread out. The risk is spread out across all the investors, and this usually it's not like you have 40% of the portfolio with one investor or something like that. It's spread out. Second thing is you would have curated the whole project from your perspective, and if there is a track record for the developer with either within the same platform or another platform, the record is out there to see how well they've developed. Yes, for an investor perspective, there are two aspects: the longevity of the investment and the safety of the investment. It's a fine balance that you have to look at. But end of the day, safety plays out more important than anything else. So as long as the track record is taken care and you've seen, I think Altgraph, that is the benefit you have. I think you have multiple customers who's already gone through multiple rounds. So that is there for the investor to see. And what I have experienced with Altgraph is these guys are amazingly professional and pretty strict in following the norms. So that makes the life of the investor a bit easier because the risk is already screened very well. And if you are looking at good real estate developers, there could be situations, that is what we have seen all the time, that we have repaid well in advance. So that definitely gives the investor a more confidence. And as long as you're following the norms and strictly disciplined in your execution, whatever, it is an amazing space to be. You don't have to be too apprehensive. And as long as you're not cutting the corners, I'm talking about real estate developers perspective, as long as you're not cutting the corners in terms of approvals and norms and all that stuff, there is no reason to be afraid of or concerned also.
Agreed, sir. Uh, I think Mr. Vikram has asked one question. What are the current ongoing projects and the future projects in Bangalore that Earthen Hues is currently working upon?
We have one project by name Bird of Paradise, which we completed phase 1 and phase 2. We would be coming up with a phase 3 in some time. And as of now, the ongoing project that we have is Forest in My Backyard. We are in the final stages. Very little bit of stock is left out. And we would be coming out with second phase later, maybe in about 6 to 8 months' time. And very shortly, we'll be coming up with our most exciting project, which I'm totally kicked about. I'm totally passionate about, is a project by name Lake Botanica. It's one of the best locations in the entire micro market, and it's coming out very well in terms of the themes and all that stuff. We will be coming out with this project very shortly. It's a matter of 2 to 3 months' time. And all
That,
these three are in North Bangalore. As I said, we focus in North Bangalore.
that's really helpful, okay, sir. So I think we do not have any more questions as of now. If somebody has any more questions, feel free to post it. I think otherwise we would be basically closing in on the webinar in next couple of minutes. So that's about it. I'm really thankful to Mr. Rakir, basically to be present on this webinar and give such lovely insights on the real estate space itself. It is one thing, basically, for a lender to do its their own due diligence and effectively structure an investment product. It's a completely different space when the developer comes into the picture. It is, I think, Earthen Hues has been one of the very you can say proactive borrowers in terms of prepaying. We have done a total of 3 transactions and the track record has been exceptional. So definitely, I believe that the instrumental success of Earthen Hues in terms of delivering projects as well as in terms of prepaying all the NCD investments is the credit goes to you, no doubt about it. And I think we may be able to work upon as many better transactions as we can to deliver it to our investors and make very lucrative returns, and thereafter also minimizing the risk. And in that venture, I definitely wish you a best of luck, Akil sir, and I believe that we continue to see more and more on our platform, and we see that our investors are also happy with you as well as the organization.
Thanks, Kaivalya, for those wonderful words. But I would, give this credit for the wonderful team that we have in Earthen Hues. We have a wonderful team, very excited and inspired team. And second important point I would like to mention in this overall real estate perspective is we are in a cusp of exponential growth as a country and Bangalore as a city. And huge growth. We are in the best of the demographies that we are looking at in terms of economy, in terms of the growth aspects overall as an economy and a country. And this is aided by a wonderful population in terms of age group and all that. This overall is the driving force. So that being the case, the cream always comes down to real estate and development and all related stuff. So I would definitely wish all of you, all your attendees here and everyone, it's the most exciting space to be in the most exciting times. So I wish you the best. I wish you all the maximum earnings that you have in whichever way on real estate as a product, as an investment. Have fun, enjoy, and start enjoying the earnings on you and your family. Have fun.
Well said, sir. Thank you.